Hello and welcome to NDTV Profit. You're watching IPO Adda, and my guest today is Parth Jindal, MD of JSW Cements. Parth, your IPO is coming on 11th. Can you take us through the entire proceeds which you're going to raise? It's the 3,600 crore IPO, and I think the second one in the last couple of years after JSW Infra, which came out with an IPO. How are you going to use the proceeds?
Sure. So the IPO opens on the 7th and closes on the 11th. And like you rightly said, we're raising 3,600 crores. 2,000 crores is an offer for sale where the private equity investors in JSW Cement, Apollo, Synergy Capital, as well as State Bank of India would be partially offloading their stake. And the 1,600 crores is getting infused into the business as primary. We've disclosed that about 520 crores of that is going for debt repayment. About 800 crores of that is going towards building our integrated unit in North India at Nagaur in Rajasthan. And the balance is being used for general corporate purposes. So the purpose of this IPO is really to enter the North Indian market as well as to become a pan-India cement player. And this is the first step in our journey from 20 million tons where we are today to 42 million tons, which we would like to get to over the next 3 to 5 years.
Do you see this IPO being also an exit for some of the investors who came in 2021? Because your valuations have more than doubled since the time they came in. I think, if I'm not wrong, 1,600 crores for 19%, and now we are looking at 19,500 crores for the upper band which is there. So is that also one of the reasons?
Yeah, so the upper band is at 20,040 crores, and you're right. They came in at a lower valuation, and they would be partially exiting, but they will still retain about 7% of the company even after the IPO. So yes, every fund has its strategy. So I'm sure they are looking at they are partially exiting, and partially they would remain in the business. And yeah, they came in at a very timely time for JSW Cement. That 1,600 crores that they invested in 2021 has really allowed us to expand and become the 20.6 million ton company that we are today. So we'll always remain grateful for their participation, because without the capital that they provided in 2021, we would not be where we are today.
Do you see the environment also very challenging because there's a consolidation happening? Two major players are emerging, and you're also one of them, which has come in the last 10 years. And there's a hyper competition which is now for consolidation as well as for market space. Do you see that as a big challenge for you as you look to get into the northern markets?
No, I think see, there is no doubt that the number 1 and number 2 players are extremely strong. In fact, a bunch of the cement companies are very strong. Whether you look at Ultratech, you look at Adani, you look at Dalmias, you look at Shree Cement, you can look at JK Cement, Ramco, Nuvoco. Everyone is extremely strong, aggressive. Many of the companies that I mentioned have no debt on their books, and all are expanding. So in this backdrop, yes, it is challenging to be a new player. It is challenging to grow in this market, and it is challenging to take market share. But I think we bring a lot of differentiation to the industry because we are fully backward integrated. The waste product that comes out of the steel making process, the waste product that comes out of the thermal power making process, that is our raw material. So the blast furnace slag or the fly ash, synergies are there with the group. We're also able to leverage the JSW infrastructure, ports and rail facilities to lower our logistics cost. And the JSW Steel sales and marketing and distribution network, because TMT rods and cement are always sold together. And hence, we are able to leverage the power of the JSW Group brand and the various synergies that I spoke about. So this gives us a competitive edge over our competition, whether it's in distribution, whether it's in raw material cost, whether it's in manufacturing, setting up new capacities cost. All of our numbers are substantially lower than our industry peers, and hence we are able to expand and grow. So we are very bullish. I am very bullish of the growth path that this company is on. We have been the fastest growing cement company over the last 10 years. And I expect us to continue to remain the fastest growing cement company over the next 10 years.
No, the reason why I was asking this question was, you have strategic advantages with respect to group companies, and that brings in synergies for you.
Yeah.
But at the same time, when we saw in FY25, pricing was depressed, volumes were not growing.
Yeah.
We saw your cash flow from operations dipping
Yeah.
from 1100. Your EBITDA came down from 1100 to roughly around 800 odd.
864.
864 crores, which came down. So the sensitivity to the external environment seems to be very high for your cash flow from operations.
Yeah, of course. I think, apples to apples, given what happened in the industry last year, relatively JSW Cement did much better because we have the strength of the group, strength of GGBS. But having said that, we are present in as of now, we are present only in 3 regions: the south, the east, and the west. So if there is heightened competition or heightened volatility in any one of these 3 regions, that impacts JSW Cement. And hence why we are looking at expanding into the north and into the central, so that as a company we are naturally hedged. If the price in one geography is depressed, it won't have a significant impact on our overall performance because the other geographies will do well. And that's what we saw with some of the pan-India players last year. Even though the regional players suffered, some of the pan-India players who had higher presence in the north or central, they did extremely well. And that's why as a company our strategy is to have 2 planks. For the cement side, be a pan-India player and continue to focus on penetration and volume growth of GGBS, where we are the clear market share leader.
And that's also an advantage for you in that sense, because that's a unique product, because you have a market share of 84%.
That's right.
Or in that market there. But do you see that can be replicated in the northern markets when you expand from 20 million odd to 41.8? That's a plan over the 3 to 4 years for you. Do you think that you'll be able to replicate the same success there?
Yeah, so GGBS as a product, we will continue to remain focused in the existing geographies only, which is the south, the west, and the east. We have no plans of taking GGBS to the north or to the central part of India because there are no steel plants in these parts of India. So there, our strategy will be purely conventional cement strategy, where we will be making fly ash based cement. Whereas we are very bullish on the growth potential of GGBS within the existing geographies itself.
Okay.
So while we are expanding from 20.6 million to 42 million, roughly about 8 million tons of this expansion is dedicated to GGBS, which would be happening in the zones of the west to cater to the MMR region, as well as in the south, where we will be catering to the growth of Andhra Pradesh, Karnataka, Tamil Nadu, Kerala, and Karnataka.
How do you see the entire environment with respect to volume pickup in southern market and the western market, and the pricing? Because both of them saw impact of pricing and volume last year.
I think last year was an aberration. The volume growth was only 1% in our geographies, and a large part of that was due to the general election being there, as well as a series of state elections being there. So the political uncertainty or the time taken for the new government to actually form and establish and restart government infrastructure took a little bit of time, and it's only from December of 2024 that we really saw government infrastructure spending pick up again. This year, it's a more stable environment, and the start has been very strong, both as on the volume front as well as on the price front. We saw recovery. Volume growth, in our geographies has been about 4%. Whereas pan-India has been about 5%. I expect all India cement demand to grow at about 6 to 7% this year. Whereas prices have recovered. So the lows of FY25 have gone away, and there's been a
8% odd.
Yeah, last year prices dropped nearly 10%. We've seen prices recover.
Fully recovered?
It's fully recovered. It's fully recovered. In some markets, it's gone even above FY24 levels. So we see stability. And I'm very confident with the great monsoons that we've had, that the second half of the year will be even stronger, given good government spending, good focus, as well as great monsoon. So I expect that's why I expect the first half I expect 4% sort of a growth, but I expect all year growth to be around 6 to 7. So about 8 to 9% growth I expect in the second half of the year.
from 20 odd percent, 21 million tons to 41.8, you want to expand over the next 3 to 4 years, and that would need a lot of cash flows and maybe debt on the books as you head towards that. How do you plan to bring in the cash and the debt? Because your leverage is already at 3.2, if I'm not wrong. So how do you plan to do that?
Yeah, if you look at our overall leverage of our 4,200 crores, about 1,500 crores of that is already gone towards our expansion projects. We are getting 1,600 crores by way of this IPO.
Yeah.
So that was going to really help us fuel this expansion. Plus, over the next 3 to 4 years, there are going to be substantial internal accruals that come. So our expansion plans are going to be funded by a mix of internal accruals as well as debt. At the same time, we don't want our net debt to EBITDA post IPO will drop to about 2.57. We want our net debt to our goal as an organization is to keep our net debt in and around 2.5 times over the medium term. So, the way we'll be able to manage that is because of the improved internal accruals that we are projecting to generate through these projects.
And the two items, line items which are there in expenses, one being the fair value impact and the other being the ESOP charges, will that go off from FY26 onwards, and that will improve your EBITDA as well in that sense?
It won't have an impact on our EBITDA, but it'll definitely have an impact on our profitability, on our PAT.
Yeah.
And
because you were loss making in FY25.
Yes, both these charges go away from the time we IPO.
And how do you look at the volume growth? You give me a brief idea about 6 to 8% of volume growth for the industry.
Yep.
Does this IPO also brings in the ability to have more currency in terms of any expansion or capital that is required going forward?
Yeah, definitely. I think this gives us a lot of flexibility. It allows us to compete for any acquisition if any such opportunity comes. But like I mentioned earlier, the cement industry is filled with very strong players, entrenched and cash-rich players who have stronger balance sheets than JSW Cement has. And as a result, any acquisition fight would be very expensive for JSW Cement. So for the medium term, we are very focused on our organic growth journey, which is to grow from 20.6 million to 42. We are not considering any acquisitions for the medium term.
But the group as a whole is very aggressive in acquisitions, right? And you were saying that I'm focused more on organic. Why is that actually? And you've been very quiet in the inorganic front in the last 2 to 2.5 years when there has been a lot of inorganic activities happening in this sector. Why is that actually?
Yeah, I mean, I mentioned the reasons. I think it's difficult to compete for JSW Cement with some of the larger players. While as a group we are very ambitious and we are very aggressive, if you look at the acquisitions that we have made, we've always made it based on the strength of that company's balance sheet. So when JSW Steel acquires something, it's because JSW Steel balance sheet can acquire. Similarly, energy, similarly, infrastructure. Paint was the first time where we acquired a bigger company with group support.
Yes.
But that was a very big opportunity which we didn't want to lose out on. We tried the same in cement with the Wholesome acquisition when we put in a bid. But that was again not JSW Cement acquiring it, it was the group acquiring it. Now when it is, when I am building this business and I'm on my own, I can always go to the group if some very exciting opportunity comes. But as of now, there's no exciting opportunity in my mind on the anvil.
Because Mr. Sajeet Jindal is a very aggressive person from a business and expansion point of view, and we are seeing some of the businesses also taking that outlook. But cement has been very quiet in that sense. That's one of the reasons why. Now, finally, my question is on the valuation part of it. You're coming at this around 20,000 odd crores valuation. How do you put this valuation in perspective for the investors? Because from a top line point of view and the EV by EBITDA multiple, you're coming almost at par or slightly expensive to the existing players which are there, the top tier 4 or 5 players. How do you put that into perspective?
No, I think I wouldn't like to make any comment on that. I think the individual investors, the retail investors and the HNIs as well as the qualified institutional buyers, we have seen a lot of interest in this company. and everyone should make their own decision. What I can say is that we will be working very hard and double time to try and make this company a very big success, like some of the other JSW Group companies, and each investor should read our documents and take their own decision.
Do you think there's enough on the table for them to make money on listing? Because you will be listing a day prior to the Independence Day, so will there be enough money on the table for them?
I mean, as the largest shareholder of this business, we are very excited about the future, and that is why in the offer for sale, the family is not giving up even one share, because we believe that this company is a very exciting company to be a part of.
Parth, thank you very much for joining us today on NDTV Profit.
Thank you very much. Thank you.